but we'll get the calls where somebody goes into contract, and that's the first time that they see the monthly payments. That's the first time that they see the out of pocket, and they say, "Hey, I was pre-approved up to this amount, and I went and I got an accepted offer on a house at that pre-approval amount, but these payments are way too high." And I say that to a lot of buyers who I talked to on the first phone call. What we could pre-approve you for is usually outside of your comfort zone on what you want to pay monthly or what you can budget monthly towards a mortgage payment. A lot of people say it's hard to get approved for a mortgage. It's really not. We factor in the housing expense. So your principal and interest, your property taxes, your homeowner's insurance, if you're putting down less than 20%, your mortgage insurance. And then the only other expenses that we're factoring in for you when we're qualifying is what's on your credit report. So that would be auto loans, credit card payments, student loans, other mortgages. But we're not factoring in things like your cell phone, your car insurance, your utilities on this property, right? What's your electric going to cost, your oil, your gas? We're not factoring those things in. So a lot of times when people actually break down their budgets and you go to a max pre-approval, unless there's other income coming in, maybe there's somebody who's not on the mortgage, or maybe there's income that we can't use because it hasn't been received long enough. Unless we're in a situation like that, a lot of times buyers say, "Wait a minute, that's above my budget. I'm not comfortable there." So we developed the approach very early on that, hey, we are not going to sugarcoat anything. We are not I don't consider myself in a sales position. I consider myself in a service position. And that means getting over very accurate numbers, very detailed numbers from the start. And that's going to put our buyers in the best position. And we don't, I think that a lot of our buyers stay with us. We're competitive, very competitive on rates and costs. Embraces an excellent lender to be partnered with on the lending side because of how aggressive we are. But it definitely, I think the planning is where we've really been able to grow very quickly, very fast over here. And we continue to add to it and continue to just try to make things even better for our clients and our partners.